Online retail and cloud computing giant Amazon is one of the most powerful companies on the planet, and right now investors are asking a crucial question. Is this tech giant's growth story just getting started, or is it nearing its peak? With a market cap of around $2 trillion and businesses ranging from online retail to cloud computing to artificial intelligence, Amazon Future's move will impact the entire economy. In this video, I'll break down Amazon's recent performance, analyze where its growth comes from, and give you my prediction for where Amazon stock could be trading 5 years from now. Let's get started. First, let's start off with current performance. Amazon's fourth quarter earnings released in February of 2025 showcased impressive results. The company generated $187.8 billion in revenue, up 10% year over year, exceeding analyst expectations. Even more impressive was Amazon's operating income, which jumped 61% to $21.2 billion. This substantial increase demonstrates Amazon's improving ability to convert sales into profit. Amazon's operating margins reached 11.3% in quarter four, up from 7.8% a year earlier, showing that the company can grow while becoming more efficient. On the earnings call, CEO Andy Jassy highlighted that Amazon's web service, AWS, the company's cloud computing division, now has a $115 billion annual revenue run rate and is growing at 19% year over year. Meanwhile, Amazon's advertisement business reached $69 billion annual revenue pace, more than double what it was just 4 years ago. In North America, the retail business grew 10%, while international retail grew 9% when adjusting for currency exchange rates. Now, let's look at the broader trends shaping Amazon's future. First, e-commerce penetration in the United States still sits below 20% of total retail sales. Despite years of growth, online shopping hasn't come close to its ceiling, meaning Amazon's core retail business still has substantial room to expand as more people shop online. Second, cloud computing continued its rapid growth as companies move more operations online. This growth is now accelerating because of artificial intelligence. In Amazon's 2024 shareholder letter, Andy Jassy stated the following: "Generative AI is going to reinvent virtually every customer experience we know and enable altogether new ones about which we've only fantasized." AWS sees AI-related revenue growing at triple-digit percentage, creating a massive new opportunity for the company. Third, Amazon's higher margin businesses like advertising, third-party seller services, and subscriptions now represent larger portions of the revenue mix, which improves the company's overall profitability. Let me walk through the bull case for Amazon. First, the e-commerce business still has significant growth ahead. Jassy noted in the earnings call that Profitero's annual pricing study found Amazon had the lowest online prices for the 8th consecutive year, averaging 14% lower than other leading retailers. Because of Amazon's extensive logistics network and ever-fast delivery speeds, the company is positioned to capture much of this growth. Second, AWS stands at the forefront of the AI revolution. During the earnings call, CEO highlighted that AWS launched its own foundation model called Amazon Nova, which offers lower latency and prices about 75% lower than the competitors. Amazon also builds Project Rainer with Anthropic, a massive AI compute cluster with hundreds of thousands of custom AI chips. If artificial intelligence adoption continues accelerating, AWS could grow substantially faster than expected. Third, Amazon delivering over 9 billion items same day or next day around the world in 2024, setting new records for shipping speed, a critical advantage in retail. Now for the bear case, competition remains intense across all Amazon's business. In retail, competitors invest heavily in their own online capabilities. In cloud computing, Microsoft and Google grow rapidly and compete aggressively for AI customers. Amazon also invests enormous capital, approximately $100 billion in 2025 alone, primarily on AI infrastructure. If AI adoption slows or returns of these investments disappoint, Amazon's profitability could suffer significantly. Finally, with the $2 trillion market cap, the law of large numbers makes continued high percentage growth more challenging for Amazon. Regulatory risk also persists as governments scrutinize big tech's market power more and more closely. Next, the single most important metric to watch is AWS growth. This division is Amazon's most profitable business, and with AI accelerating, AWS has the potential to become even more and more dominant profit engine. In Q4, AWS operating income was $10.6 billion, up 48% year over year, a remarkable acceleration in profitability. If this growth rate continues or accelerates from the current 19% revenue increase, it would suggest Amazon's massive AI investments are paying off. So, where will Amazon stock be in 5 years? I believe Amazon has a clear path of substantially higher levels. If revenue grows at 12% annually for the next 5 years, Amazon will reach approximately $1.1 trillion in annual sales by 2030, with profit margins likely expanding to around 15%. As higher margin business continues growing faster, Amazon could generate roughly $169 billion in annual earnings. As of today, that would put Amazon at a future price to earnings ratio below 12, which seems far too low for a business of Amazon's quality and growth prospect. While the stock won't necessarily multiply several times given its already massive size, Amazon stock remains a buying opportunity for long-term investors right now. Ready to discover more great investment opportunities? Go to fool.com/invest to receive the top 10 best stocks to buy now. That's it for today. If you found this insight valuable, hit that like button, subscribe for more, and help make our community smarter by sharing your thoughts and insights in the comments below. Stay foolish, and we'll see you next time.